Hello, welcome to the European Open briefing for Monday, February the 20th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So it's a fairly quiet start to the trading week. The dollar is managing to make some modest gains following 3 days of losses in the prior week. Of course, it's the U.S. markets will be closed today for President's Day, and that's part of the reason why we expect to see a very quiet day in financial markets on Monday. The dollar was boosted though on Sunday by some hawkish comments from the Cleveland Fed President Loretta Mester. We had some data out of Japan this morning. Japan's trade deficit came in much worse than expected in January, although exports managed to rise for the second month in a row. So it was mostly a mixed set of data there. And then in European currencies, both the euro and the pound are steadier following losses at the end of last week. The euro, of course, is under pressure from the French presidential elections, while the pound, we had some series of negative data out of the UK last week, and of course today we've got the Brexit bill being discussed in the House of Lords. But let's start with the dollar-yen pair. We can see the dollar has been moving downwards since midweek last week. It's currently trading just above the 113 level. That's up from around 112.60 yen, which was a one-week low touched on Friday. We of course have that ongoing uncertainty about Donald Trump's policies with regards to trade, and we still haven't heard much about his tax policies. US Treasury yields fell to one-week low on Friday as markets. Although the odds for a March rate hike have gone up, they're not really significant enough to indicate that a March rate hike is a certainty. So that pressured the Treasury yields last week following Janet Yellen's testimony. Also, markets are still waiting for those details about Trump's tax policies, which should be announced possibly within the next couple of weeks. Although what boosted the dollar over the weekend was comments by Loretta Mester. She's the Cleveland Fed president. She's always been one of the more hawkish regional presidents within the Fed. She said on Sunday that she'd be comfortable with a rate hike at this point, meaning she supports an immediate Fed rate hike, and that helped the dollar a little bit to move higher this morning in Asian trading. If we move on to the Japanese data, we can see that exports came in much weaker than expected in January, although that's still a positive growth for the second consecutive months. Imports beat estimates, however, they rose by 8.5% year on year in January. That's the first increase since late 2014, and it suggests although it was mostly led by higher crude oil imports, it does suggest that we are seeing signs of possibly rising demand in Japan, and also exports are expected to strengthen further over the coming months as the global demand recovers as well. Although the yen overall is down this morning against most major currencies, mainly due to lower demand for safe havens. If we move on to the euro has flattened out after that fall on Friday. The single currency came under pressure on Friday after reports that France's two left-wing candidates for the presidential election held talks for a possible cooperation, and this was negative for the euro because it was seen as helping. It was basically seen as a left-wing alliance would mean the people who would vote for center left or center right, they would more likely move to Le Pen, the far right candidate, rather than for a left-wing alliance. Also coming up today, we've got the Eurozone finance ministers meeting in Brussels for a Eurogroup meeting. We will wait to see whether or not they will manage to sort out their differences over Greece's bailout program review. Currently, there's a bit of a deadlock between Greece, the IMF, and the EU. So So if there's no progress made at today's meeting, it will likely be negative for the euro. But regardless of whether we see positive developments or not, it looks likely that Greece will probably be told that it still needs to do even more with regards to reforms. If you look at the pound now, the pound fell sharply on Friday, but for different reasons. The pound was down due to much weaker than expected retail sales numbers out of the UK for January. That was the second month in a row. We also had a big drop in December, and that was revised even lower for the December figure. So it is looking like the consumer spending in the UK could be waning after proving fairly resilient in the immediate months after the EU referendum, and that hurt the pound. Although the pound is up, it's holding fairly steady despite the fact that the Brexit bill for the triggering of Article 50 will be discussed in the House of Lords. The government doesn't have a majority in the House of Lords, which is the UK's upper chamber. And it is quite likely that the House of Lords will force the government to make some amendments to the Article 50 bill, and that could push the timetable of triggering Article 50 from early March to mid-March. Although the pound could actually go up from those amendments, because the government, the House of Lords would likely push the government for closer ties with the EU rather than a hard Brexit. Let's move on to today's calendar before we go. We don't have much data out this morning. We already talked about the Japanese data. We had some German producer prices out this morning, which came in stronger than expected, and that basically underlines the fact that inflation pressures in Germany and generally in the Eurozone are on the up. We've got the CBI trends, exports trends survey out of the UK later, and then we're going to see the flash estimate of the Eurozone consumer confidence index. But as mentioned, the US markets will be closed for President's Day, and then the main event is the Eurogroup meeting in Brussels. That's it from me. Thank you very much for watching, and have a great day.